An industrial growth rate of 2.4% in January is certainly an improvement over the contraction in industrial output that we saw in December. So in that sense, it is some sort of a relief. But are these green shoots of recovery? I think that judgment has to wait for a few more months. If you break down the data, industrial growth data, you will see some cause for concern. The manufacturing sector has improved also, but if you see the capital goods sector, it is still contracting. Therefore, investments in machinery, in plants and capital new projects is still a long way off. Of course, the mining was a big drag. It contracted again, and that was also because you have the policy bottlenecks playing their role. Although you are seeing a 2.4% growth in January, the April to January industrial growth figure is still only about 1%. Along with the release of the industrial growth data, you have seen the consumer price index data also coming out, which shows that the retail inflation is gone up and it is now around 11%. Now, clearly the implications for this is going to influence the Reserve Bank of India's approach to the monetary policy review. I'm aware that the Reserve Bank of India will also look at the core inflation, also the wholesale price index based inflation, which those rates may not have gone up. That data will later this week will show. But for the Reserve Bank of India, it will be a tough call. Although the markets have already priced in, markets have already factored in the 25 basis points cut in interest rates. 2.4% growth actually confirms the CSO's earlier estimate that the current financial year will perhaps show annual GDP growth of around 5%. Earlier fear that it might be even lower than 5% may not actually come true, but certainly it will not be very much more than 5%.